Hi everyone, I'm going to do a video now about managing your trades, and I'm just going to run through this week and show you a few of the options that are available to you, and if you like, kind of my sort of favourite techniques. Obviously there's some people in the group who are doing exit and management techniques which are different to this, and that is fine. I just kind of want to show you sort of my approaches, and by all means you can then make your own sort of variation on that. So what I'm going to do is I'm just going to go through the pound dollar this week. Okay, so here is Monday. Let's just get highlight open. So the first one, let's call it stop and reverse. Okay, and this is quite an aggressive one, taking profits early and moving your stops up early. Okay, so here's the start of Monday. I look for price to break out of this Asian range first before I start trading. Really we're looking for the high and low of the day, and we're just ignoring this. Imagine this just doesn't exist. Okay, so here we start Monday morning. We've broke out of the range, and our first breakout of a high or low is short here with our stop over the high. Okay, so for all intents and purposes, this is our high of the day. Okay, it's our current high of the day, and we've broken out. And once we're in a short, then we're going to the only trade we're going to take would be a long trade. Okay, so you see the first breakout long here, and that marks our low of the day. So if you want to go for more of an aggressive, have less drawdowns but accept some smaller wins, with a stop and reverse, all you do is if you're in a short and a long triggers, then you manage your position. Okay, so here you're in profit, the long triggers, you would have moved your stop loss up to a TP here and closed out your short. Okay, and then you're long here, and then you're looking for a short breakout, and it doesn't come, so end of the day you can just manage this position, move your stop up to break even or take profit. Okay, I'm just going to move on to Tuesday, and then we do the same process every day. Okay, so we break out of the range, we're looking for our first high or low breakout, that comes here, and we put our stop below the low. Then we're looking for a short breakout, that comes here, and the stop over the high. Now in this instance, you see your long is not in profit, so you leave the hedge there. Okay, you only manage your stops or take profit if price reverses and you've got some net profit on the table for that open trade. And then price comes down, this long gets stopped out here. Okay, so now we're just short from the high, we're looking for a long. Here's our long. Price reverses again, stops you out here, and you run down to the end of the day. So you've had one win and two losses. Okay, so probably a small loss on that day. And then on to Wednesday, we break out here. Okay, see we're still trading inside the Asian range there. So this is our first short. Then price reverses and sets up a long. Okay, so you can close out this short here. We go long, and then we're looking for a short. Okay, and so you TP, you long here. So pretty much a nothing day there, Wednesday, no movement. You kind of need nice swings if you're doing this stop and reverse type of management. Okay, let's go on to the next day. Okay, this was yesterday. I think we all struggled yesterday, and you can see why. Particularly rangy, it was unpleasant. So you went long here, and then you reversed and you had a short hedge. You're long stopping out on this next bar here, and then you go long and you're in a hedge again, and then you can see a short sets up here. Your short gets stopped out by this spike. Short sets up here, so you manage your stop on this, it gets stopped out at break even. We're now short, and then you add a long hedge here, and goes through to the end of the day where you can close out one at break even, one small loss there. So this would have been an unpleasant day. You had 2 losses, and all your other trades gave no profit, so just 2 losses there. But you can see it does kind of manage your drawdowns a bit in the worst days, and you're going to get one of these every week. You've got to be prepared for these, with any of these exit techniques, you will find periods where it is just truly awful, like a week or even like a 2-week period where it just doesn't work. But those are few and far between. But it's obviously wise to be aware of that. Okay, so that's the first technique, and we've been making nice swings recently. That has been working quite nicely, but you can see it it requires a decent movement on the day to get decent profits. So you'll find that your winners are quite small doing that, but you take a lot less stop outs, and that might suit you better. Now the second way of managing your trades is by stacking and holding. Okay, so let's call it stacking your trades. So for this, you're just going to trade the high and low of the day, and then you're going to hold them until you get a stack of trades. So how many stack of trades? This is where you need to make a decision. Generally, you're looking for at least 2, preferably more, but let's walk through this week and it will become a bit clearer. So this was our first short here, remember, on Monday, and then we're looking for a long. Okay, so we take the long, and now we have the high and low of the day, and we're going to hold those. Okay, so then we move on to the next day and we trade the high and low of the day again. So we would have went long here and then short at this breakout. This long gets stopped out, so we're looking for a long again, and we go long here, and then price reverses and this gets stopped out. Okay, so and our long from day 1 has been stopped out. So at the end of day 2, we're holding these 2 highs, and we've taken these 3 losses. Now obviously at this point here, you can look at your losses and you can look at your profits, and then make a decision if you want to take profit on those shorts or continue for another day. Okay, looking at that, I'd say it was probably around about break even, your losses and your wins. So it's not really worth going through 2 days trading, setting up positions and then closing them out. If you're feeling that you want to do that, then maybe more of a stop and reverse type approach is better suited to you. So let's go on to day 3, and I'm just going to have to just shuffle this a little bit so we can see what's going on. Okay, that's better. So we're holding this short here, and we're holding this short here, and all the others have been stopped out. So day 3, we have a long here, and then we reverse and we have a short. So we have the high and the low in a hedge, then price breaks down, this long stops out, and then we have a long setup here. Now here is a good opportunity to take some profit. You've had these 4 losses, if you remember those 3 from Monday and Tuesday, this one this morning, and now we have 3 decent wins on the table. Okay, I've added this up. I think it's about 190 net pips profit. Okay, that's a pretty good amount of profit trading this style on GU H1. I would clear the table here and start my sequence again from this low. Okay, so you've stacked 3 trades there, you've covered your costs, and you've made some profit. Let's just go on to the rest of the week from there. Okay, so all our trades are closed out and we're long from the low here. So then this now is your high, and you'd go short and you'd hold them till the end of the day. The next day we had this horrible long, short, long, okay, with these first 2 trades stopping out, and then a short from the high here. This high was stopped out on the spike up there, and we go through to the end of the day, and now we're holding this low and this low. And then we come through to today, and I think we've just broke out of the range here, and we would add a long here. So obviously today we'll be looking for a nice move up and a high set up to take profit on these 3 longs. Okay, so that's what I call sort of stacking your trades. It's quite nice in a way, because you can just like hold the high and low of the day and not get sort of involved in the stuff in between. So if you secure the high and low in the first 2 trades, you don't get caught up in sort of the range that occurs. This works really well. I mean, obviously if you traded like this for 5 days, then you know you're going to make a loss for the week. Generally you get at least 1 decent move of the week, and you know that's either going to be your profit or it's going to recover your losses. So it gives you a good chance of profiting every week. So that's stop and reverse, which is an aggressive type of management, taking lots of small profits, and then stacking, which is holding for big wins, bigger wins should I say. And then you can do a combination of both, okay, which is probably my favourite way of playing it. But you know, I like all of the approaches actually, and they all work quite well, but this one probably suits me the most. So for a combination, what you're going to do is you're going to start the week, you're going to secure a high and a low, okay, and we're going to hold those trades. When we've got a high and a low secured, any trades that we take inside that range, okay, we're going to manage like stop and reverse aggressively, and any new highs and lows that happen outside that range we're going to hold on to. So you can see here we're holding this high and low, then we go through to the next day and we trade the high and low of the day. So we would have gone long here as before, exactly the same entries with all of these, okay, and then we would have gone short here, this long would have stopped out, and then we would have moved our stop up to break even here when the long triggered, this stopped at break even, then we reverse again with a hedge, and price breaks down here. So again, these 3 trades have stopped out, and this trade, because it's not the high, we're going to take profit on it, so we'll close that in a trade out. So at the end of day one, we're just holding the high of the current week, if you like, and we have no low at the moment. So the next day we take the low here and go long. Again, this is the range of the week so far, so we're going to hold this trade. Price reverses, it goes short and breaks down, taking out the low, and we're already holding the high of the week here. So this trade we're going to take profit when the long sets up. Okay, so we close this short out down here. Now we're holding this low and this high, and we trade the next day. Here's the horrible choppy bit: long, short, long. We managed that aggressively because it's inside the high and low range, so we go break even there, short, break even there, long, and we close it out. So that's that sort of non-day there, and at the end we're still holding this high and low. So you can see we're kind of using the stop and reverse technique when it's inside the high and low range, okay, and then when we break out of that, we hold those extremes. And what you end up with is you end up with at least one large win. Okay, there's the range of the week between the high and low, and then lots of small wins and losses in between that range. So that kind of gives you a combination of larger wins and smaller wins, and kind of mixing the two together. Now, you know, the variations can go on, and you know, they can you can do endless variations to kind of suit your needs. Just to give you an example of one, I mean, something you can do is, let me find a day where, okay, so you could do like stacking just in the day, okay, and taking all of the trades, not just the high and low. Okay, so on this day you would have gone long here and hold it, and then you would have gone short here and hold it, and you have a hedge. Then your long stops out, so you add the next long here, and then we reverse again, and you take a short here. So now you've got this short, and this long, and then price breaks down. You take profit on your stacked two shorts, and your long got stopped out. Let's just show that on the next day as well. So we would have gone short here, and then long, and we're just holding them, and then short. Okay, price comes down, right, day's pretty much done, this trade small profit, this trade small profit, this trade a little bit of a loss. Okay, so you're just kind of stacking all of the direction changes and then waiting for that breakout. Just trying to find a nice example of how that works. Not really a nice example, but just to show you, like, holding all your trades. So this would have been your first breakout long, price comes up, then you have a breakout short, and then okay, the day peters out and you close out this short and this long in profit. Okay, and this works, you know, really well when you get nice days like this. You end up with two trades stacked long, and maybe you had two shorts that stopped out. So that is kind of, you know, your three options, and of, you know, how, well, it's not your three options, it's three options that you can consider. Now, you know, people who perhaps come from a scalping background are doing really nicely by just picking an exit and not waiting for a direction change to set up before managing their trades. I think that's those techniques are brilliant as well, and clearly they're doing really well. It's not something that I've ever really done, so I'm not going to give you advice about how to do that. You're probably much better contacting those people themselves and asking them for their tips on it. But as you can see, there's a lot of options when it comes to managing the trades, and you really should kind of experiment with them to find what suits you the most. So that's it. I'm going to get back to the charts now, and I'll speak to you all soon.